Well, hello, everybody. My name is Eamon Kelly. I'm the chair of the Democratic Party of Evanston, and I want to thank everybody for joining us. I'd encourage everybody to mute your lines just so that we can hear our speakers. We're here tonight to hear about the fair tax referendum, which I think is one of the most important things on the ballot here in Evanston. Evanston, Cook County, Illinois. It's critical. Rather than tell you myself why it's important, you'll hear from our speakers tonight. I will tell you it is the first thing on your ballot. So if you remember nothing else, you'll remember many things. But one thing you should remember is that the first thing you should do is vote yes. I want to thank our sponsors who helped promote this event. We'll try and identify you in the chats. I want to thank everyone who went through the effort to promote it. I also want to, if we have any elected officials that are with us, or Democratic officials, please identify yourself in the chat so everybody knows you're with us. I don't have a list, so I'm not able to identify you, but I do want people to know you took
this. This is Eamon Kelly.
Yeah. And then, most importantly, I now want to introduce our moderator, and we're very fortunate to have Joan Esposito with us. She is a longtime anchor in numerous Chicago area television programs, but she's now found on the radio with the Progressive Talk radio on WCPT AM 820 from 2 to 5. I got that right, Joan? 2 to 5?
Yep.
You should tune in.
Monday through Friday.
If you tuned in today, you would have heard a great program. You can listen to it at WCPT820.com or on Spotify or on the radio. So with that, I'll let myself stop talking and we'll hear from Joan. Thanks so much, Joan.
Thank you for inviting me tonight. I am happy to be here. Obviously, very subtle background here, a little cross promotion. This is where I do the Facebook Live from my radio show. I want to, again, reflect a couple of housekeeping notes before we move forward. You see yourself in a little box for those who aren't familiar with Zoom, and next to your name there should be a microphone with a line through it. That means you're muted. That means we won't hear you talking to the other people in the room or whatever. So you want to make sure that that little microphone has a red line through it. At the very bottom of your screen, you can see the word chat. If you click on that, if you want to ask a question or make a comment, when you click on that little chat button, a little side screen should open and you can go over there to the bottom and where it says type message here, you can write your question or your comment, and I will try to keep track of those so that when we get to the Q&A part of this, I will be able to ask your question for you so you can stay muted. Our presenters tonight are Daniel Biss, who you can wave, Daniel. So wave, okay, that's Daniel Biss. He started life as a mathematics professor at the University of Chicago. Then he became an organizer. He's been in the Illinois House, in the Illinois Senate. He ran for governor of the state of Illinois against Rod Blagojevich. And he has been an activist, once in a while, a radio fill-in at WCPT. And he is currently in the running for mayor of Evanston. Also, we are going to be hearing from Kathy Tate-Bradish. She's been a member of the League of Women Voters since 1988, and she has been part of the League of Women Voters team that has been trying to get a graduated state income tax now for about, pretty close to 20 years, I think, this effort. She also is involved. She's the co-founder and executive director of an international NGO based in Kenya, which trains Kenyan farmers to teach HIV prevention, early pregnancy reduction, and sex education in their communities. And she spends 1 to 2 months a year in Kenya. She's a graduate of the University of Illinois and Northwestern University Law School. She has taught middle and high school in Austria, the United States, Germany, and the United Kingdom. So welcome, Daniel. Welcome, Kathy. Let's begin this. Let me turn it over to Daniel Biss. Go ahead, Daniel.
Thank you, Joan. Thank you for the kind introduction. It is a funny context. Joan and I are used to her interviewing me on the radio in the afternoon, and this is a different audience, different context, and I really appreciate you taking the time to do this. Thank you so much to DPOE for hosting this event. You know, we are now 4 weeks from Election Day of, you know, quite possibly the most important election this country has seen since 1860. And it is right and appropriate, not to mention inevitable, that most of our waking moments, together with an enormous amount of constant existential dread, are focused on the presidency and the Senate races and so forth. But man, we do have an absolutely critical referendum on the ballot here in Illinois, the fair tax referendum. Not only is it critical, but it's the kind of thing that, perhaps unlike the presidential election, I bet everybody on this call has a lot of friends who are still not totally made up about. And so we have this remarkable opportunity in reaching out to our own friends and neighbors to put a lot of votes on the board for something that I think is the single most important policy change we could achieve in the state of Illinois. So I'm going to talk for about 10 minutes or less. And I want to share just a few quick slides. So there should be, my slides should be in front of you. If it's not, you should make angry gestures or something, or, okay, I'm seeing no anger, so I'm going to assume there's a slide in front of you. And this slide honestly explains, in my opinion, just the whole issue, the issue before us. Because as we'll talk about in a moment, the referendum that we're going to be voting on in November or before is a referendum to change the Constitution to allow a different structure of income tax. But to explain why, I want to just spend some time with this chart, which I think is utterly bananas. So what this chart shows is each bar shows for a different income category in Illinois how much of your income you're paying in taxes. And when I say taxes, I mean everything: state income tax and local taxes, schools, the water reclamation district, all state and local taxes added up together. And what you see as you move from left to right across the screen is how much different income categories, how much the poor, how much the wealthy, how much other people are paying to state and local government in total taxes. And what you find is on the left-hand side, this is the 20% at the bottom of the income distribution, the poorest fifth of Illinois households. Well, they're paying 14.5% of their income in taxes. And what you find as you migrate to the right across this screen, and you're looking at wealthier and wealthier people, you see the amount that they pay drops a bit more, until you get to the top 1% and discover that the top 1% are paying 7.5%. In other words, people at the bottom are paying 14.5. People at the top are paying 7.5. The situation we have in Illinois is a situation where the richest people in our state are paying half the tax rate of the poorest people in our state. And I'm belaboring this because, you know, here we are at a meeting of the Democratic Party of Evanston. We are Democrats. We are mostly very progressive. I am personally very progressive. I have a lot of beliefs that, you know, maybe only half the country agrees with, maybe in some cases only 40% of the country agrees with. But you know what? You could not find almost anybody in the state of Illinois who would look at this chart and say it makes sense, whether they're a Democrat or a Republican, an independent, a progressive, a right-winger. Almost nobody would say, hey, the tax system we ought to design is one where the richest people pay half what the poorest people pay. And yet that's what we have in the state of Illinois. So I want to just take a minute to explain why that is. And ultimately, we're going to be talking about the income tax, but I want to first talk about other taxes. So what are the other big taxes we pay? Well, the first one that comes to mind, of course, is the property tax. We have a high property tax in Illinois. And if you ask yourself, who bears the brunt of the burden of paying property taxes? Is it the poor? Is it the rich? Is it the middle class? Is it working families? Who is it? Well, you know, the first thing you might come up with is kind of middle income homeowners who pay a ton of their income in property tax. It hits renters even harder, though it's passed through the property tax paid by landlords. And if you think about what share of their income the very wealthy pay in property tax, what you realize is, well, the very wealthy are paying less of their income for housing. So consequently, they're paying less of their income in property tax. And this is just how property tax works. It's not a defect of the property tax in Illinois, though there are some defects to the property tax in Illinois. It's just how it operates. It is a tax that is borne disproportionately by the poor, the middle class, working families, and small businesses. And just by how it's structured, the rich are paying a lower percentage of their income in property tax. And so what that means is you're just going to get a graph like this when you ask yourself, who's paying how much property tax? Okay, fine. What's another example of a tax we pay a significant amount of? Well, the sales tax. And if you think about who pays most of their income in sales tax, you know what? It's the exact same picture. Whether you're truly the working poor or middle class family, you have likely no choice but spending an awful lot of your income in goods that you purchase in the state of Illinois that are subject to sales tax. And by the way, if you get a $1,000 raise, you're likely to wind up spending a lot of that, again, on goods in the state of Illinois where you pay sales tax. By contrast, if you compare to someone like, for example, Ken Griffin, the richest person in Illinois, who makes north of $500 million in many years running his hedge fund Citadel, imagine he's got a really good year and he makes an extra $100 million that year. Is he going to go down to the corner store and buy some more stuff because he got that raise and pay more sales tax as a result? Of course he's not. He might buy an additional investment property in Switzerland or another couple of paintings by Dutch masters at an auction in London. But his behavior when he gets that raise is not going to change in a way that results in him paying more sales tax. In other words, the picture you get if you analyze only the sales tax is exactly the picture in front of us, which is to say the poor bear a disproportionate share of that burden. Middle income families are right behind, and the rich pay way, way less as a share of their income. In other words, this picture, this unfair picture, this silly picture that nobody would support, a picture that says that the rich are paying half of what the poor pay, is just kind of what you get when you analyze how sales taxes and property taxes work in pretty much any state, frankly, in almost any country. That's just how those taxes operate. And so as a result, most states have said, listen, the poor and the middle class are bearing an unfair share of the sales tax burden. They're bearing an unfair share of the property tax burden. And so as a result, we've got to somehow level the playing field and ask the rich to pay their share somewhere else in the tax code. And so what they do is they say, we'll ask the rich to pay a higher tax rate than everybody else. So if you go to Wisconsin, for example, very wealthy people are paying 7.65% of their income in tax, but people who make much less are paying much less. Something very similar is true in Iowa or Missouri. In fact, it's true in the overwhelming majority of states. What they say is, hey, the sales tax is kind of unfair, the property tax is kind of unfair, so to at least make up for that, we'll ask the wealthy to pay more for the income tax to kind of balance things out. The problem is in Illinois, that's unconstitutional. It would be unconstitutional to ask the wealthy to pay a higher share. So right now, everybody pays 4.95%, whether you're making $20,000 a year or $20 million a year. And as a result, we have this picture of a completely unfair, illogical tax system that nobody in their right mind would support, whether they're progressive like me, moderate, conservative, Democrat, or Republican. And so the opportunity that is awaiting us this election is to vote yes on the fair tax, which, by the way, will be the first question on our ballot. If we vote yes on that tax, then the provision in the Constitution that prohibits that step that says it's illegal to ask the rich to pay more will be removed. But not only will that provision be removed, one other thing will happen. The legislature said, we don't want to just ask the people of Illinois to vote on some abstract philosophy referendum about theories of taxation. We want to give people a chance to see what tax rates they're voting on. And so they passed a law that says, if the referendum passes, here's what the tax rates are going to be. And I put them in front of you, and it's obviously kind of an annoyingly dizzying chart of numbers. the critical thing to focus on is very simple. Today, everybody's tax rate is 4.95%. What these charts say is that if you make $250,000 or less, you'll be getting a break. So that's 97% of households. Everybody making $250,000 or less will be getting a break. People making over $250,000 will be paying a modest amount more, but by the way, nothing out of line with what they're already paying in a place like Wisconsin or Iowa. And so when we were voting yes on the fair tax, it's not only voting yes on the principle of fair taxation, it's voting on these specific tax rates, which give a break to 97% of households, ask 3% of households to pay just what they would already be paying in some of our neighboring states, and in so doing, bring in around $3.5 billion to help close the state's structural deficit. So that's the basic situation before us. We have a profoundly unfair tax system, and it's not unfair because the legislature and the governor have made poor choices. It's unfair because they've been handed a system that prevents them from making good choices. And what we can do this fall is vote yes, remove the handcuffs that have prevented them from making good choices, and immediately enact a tax code that will give a break to 97% of households, ask 3% of households to pay only a very reasonable, modest amount more, and bring in $3.5 billion that the state sorely, sorely needs. So that is what I have to say about this. I think passing this would be correcting the single most important error in Illinois fiscal policy and an incredible opportunity for all of us. And with that, I want to hand it over to Kathy.
Oh, thanks so much, Daniel. Daniel is a much more sophisticated presenter than I am. I hope that some of his terminology like bananas hasn't thrown you for a loop. And he has started off with really the most important thing about our current tax system, which is how unfair it is and how burdensome it is. So I'm going to cover a few other points, and I hope, whoops, I didn't mean to be quite that far along on this already. And perhaps as I go along, also inoculate you a little bit against some of the meritless arguments that you might be hearing on the other side. So Illinois does not have a spending problem, despite what you might hear. I'm going to show you that. The flat income tax doesn't collect enough money. It's unfair. Daniel has shown you that, but it also increases income and racial inequality. It actually increases it. Millionaires will not be fleeing the state. They won't, they won't, they won't. And it's highly unlikely that once we have a graduated rate tax, our legislators are going to sneakily look for the first opportunity to raise it then on the middle income earners. I keep those in mind as you go. And also, and I know that you've been told you can pop questions in the chat box, but as questions occur to you, or suddenly elephant in the room, pensions, put it down so you're not thinking about it while I'm talking or while we're answering some of the other questions, so that you can kind of be listening as we go along. So this adds on to what Daniel has already told us. We've seen how completely unfair the tax burden is in the state of Illinois, but have a look at this. So on the graph on the far left, and I've taken it upon myself to give you some eye-rollingly wonky slides here. I hope nobody's on a phone, but have a look at this. This is the income ratio of the wealthiest 1% of income earners in Illinois compared to the other groups. We're just going to look at one of them. Over here on the right, these two bars. So in the gray, this is showing us that the top 1% of income earners in taxable income have 137 times the total amount of taxable income than the lowest 20% of income earners in the state of Illinois. Exacerbated, of course, by our flat tax, which can't help with it at all. But have a look at this. After we've paid that bucket of taxes that Daniel was talking about, so income tax, property taxes, which might be passed through our landlord, excise taxes, sales taxes, right? The top 1% actually earns 149 times as much as the bottom quintile. So not only does our flat tax not help us be more progressive and more fair. It contributes to exacerbating the income inequality that we have. And as we well know, and probably everyone on this call was aware, but if you weren't aware before, we've been aware these last 6 months or so that our Black and brown residents in Illinois and indeed in the United States earn less per capita than white residents do, and tend to fall into those bottom quintiles in a higher percentage than their representation in our population at large. So we actually are exacerbating racial economic inequality with the tax policy that we have right now in Illinois. But what about those folks at the top? Daniel was saying we're going to be asking them for a little bit more. Well, first of all, as we've all read, the billionaires are doing great during COVID, right? But just in generally, and this, I know that this chart only goes to 2015, but it's really been played up to the start of COVID. I don't know where it is right now, but the top 10% of income earners in Illinois gained 108% of the change in income since 1979, 108% gained by the top 10%. Where does that leave the bottom 90%? Minus 8%. So the bottom 90% of income earners, which of course is the vast number of people in Illinois, have gone backwards since 1979 in their buying power, in their saving power, in their investment power. Let's look even further to the top 1%. Let's just take a look at this chart over here on the left, or this bar graph over here on the left. In 1979, orange is what the average income was, average income of the top 1%. So this is all the top 1% in Illinois. $411,000 a year in income in 1979. In 2017, $1.5 million a year in income, a 254% increase since 1979. And we know that the bottom 90% have gone backwards, right? So these are among the people that we're going to be asking to pay a few percentage points more in their income tax rate in the state of Illinois. So right now, not only is our taxing system burdensomely unfair, it's also not raising nearly enough money for the state. And something that I'm going to focus on a little bit is funding public education. So I like, for those of you who like prose, there you go, written words. I don't know if I'm speaking to all of the different learning types out there, but here's a bar graph that I think really shows it well to us. So blue is the US average, red is what we do in Illinois. Substantially different in both cases. So have a look at our two bars over here on the left. In the United States, on average, localities pay just under 45, let's say they pay 45% toward the per capita cost of K through 12 education in their communities. In Illinois, and this goes back to what Daniel was talking about with property taxes, because how do communities make up that difference and fund their K through 12 education in their communities? We pay about 2/3, 66% of the cost of K through 12 education. So why is that? Why are we so different? Well, the average state share in the United States is just under 50%. Other states pay almost 50% of the cost of a K through 12 education. In Illinois, just over a quarter, 27%. And fun fact, back in the late 1970s, Illinois was much closer to the blue. So as the state share of funding of K-12 education has been going down, down, down over the decades, that's when we've been seeing that concomitant rise, rise, rise in our property taxes. So when people say that they feel tax burdened in Illinois, yeah, but mostly they're talking about their property taxes. Okay, here's my most stupefying slide, and you don't need to even be able to read all of it. I'm going to explain it to you. But this is where we show that we don't have a spending problem. We have a revenue problem. And since the fiscal year 2000 to date, in real money, adjusted by all the smart people, so we're talking about the same kinds of dollars as we were back in the year 2000, look at the bottom right-hand figure there. We have cut net general fund service appropriations over 20% in the last 20 years. And in some categories, it's been absolutely egregious. Look across at higher education, almost 50% cuts in the state of Illinois' share of our great state universities and colleges, and almost 50% cut just in the last 20 years. And that goes a very long way to explain the high tuition and fees that make it no longer affordable even to the average middle income family. I will just point out the top line there, K-12 education is actually up a tiny bit. If I'd been talking to you about this about 3 or 4 years ago, it was down significantly. And many of you, especially educators and legislators, know that our legislature did pass something called the EBF, the evidence-based funding, and required by law that the state of Illinois put an extra $300 million a year, each year, into K-12 education, targeted though, evidence-based, where it's needed, where there are lots of English language learners or extreme poverty, for example. That's the only thing that has bumped us up into the positive, but in fact, this year it's not appropriated for. Why? We don't have enough money. So going forward, I don't know what that percentage is going to look like in the next year or 2 or 3. And just so you know, when we talk about general fund spending, that's most of where a state spends its kind of discretionary money. They've got to pay bills, they have to pay interest if they've borrowed on those bills, but these are the 4 core services. So it's education, healthcare, human services, and public safety. That's what this is. 96% of all the general fund money goes to those categories, and they've been cut across the board by 20%. So it is not a spending problem. It is definitely a revenue problem. And our situation has contributed to the fiscal crisis. So because we don't raise enough revenue, we end up with unpaid bills, but we have to pay those bills, right? We have to pay those bills. Those bills go to, for example, nonprofits and businesses that are contracted with the state to do state business. Well, when we pay late, first of all, the nonprofits and businesses can't not pay their rent and can't not pay salaries and can't not buy supplies. So sometimes they have to cut. So that's fewer services and also job cuts. But then in addition to that, because the state pays late so often, it's kind of the plan. Sometimes we borrow, in which case we have to pay interest. And in any case, there are fines associated with that. So basically everything we do currently in the state of Illinois costs us more money than it needs to because of our lack of revenue. And all of that together contributes to a structural deficit, which means that inherently, by definition, the way we raise taxes in Illinois, because we're not allowed to ask a little bit more from those people whose revenue growth has been, whose income growth has been exponential over the last couple of decades, we can't ask them for another couple of percentages of that many percentages of growth that they've seen. We have a structural deficit. We cannot raise enough revenue each year to keep up with our rising costs. Millionaires aren't more likely to leave. They're not. Millionaires move for the same reasons that everybody moves. They move for jobs, they move for family. Believe it or not, for those of us sitting here in Illinois and looking forward to shoveling some snow in January or February, some people like nice weather. They might move for weather. They still have to have a job or a retirement plan or a family to move in with. And interestingly, there have been a lot of articles that have come out lately. Maybe when I'm done talking, I'll pop them into some links into the chat. But there have been a lot of articles coming out lately saying, yeah, you know what, actually millionaires don't flee states that raise their taxes. Some do, of course, but that's the difference between an anecdote and a statistic. Of course, we're going to be able to find some stories of millionaires who leave, or let me just say millionaires who say they will leave, right? And one of the things that some people in the opposition love to talk about is this outmigration. And they often will talk about outmigration since 2010 or 2011, because 2011 was that temporary income tax increase that went up to 5% for a few years, right? Well, guess what? We are a net outmigration state. That doesn't necessarily mean that a state's population is shrinking, right? Because there are births and there's immigration in from other countries, which isn't included in this. But the only year that Illinois has not had net outmigration since the beginning of the 19th century was 1947, at the height of the Great Migration, when lots and lots of Black individuals and families were moving, and many of them, as we all know, came to Chicago. It's the only year that we haven't had net outmigration. In 2011, when we did have that temporary tax increase, the outmigration actually slowed down. Now, so the point is, there is no statistical correlation. There's never been a peer-reviewed study done that says that there is any link between migration and tax policy. And we often hear a lot about our neighboring states. Well, guess what? When we look at percentage of the population, a higher percentage of people from Indiana and from Wisconsin moved into Illinois than Illinoisans who moved to either of those two states since we had that temporary tax increase. What about some specific states? In California, they raised their millionaire rate is 13.3%, close to double what maybe not quite close to double, 40% higher maybe than what we're even suggesting. Number of millionaires kept growing. Ditto Minnesota, a fellow Midwestern state, which is doing very well, by the way, and has the best GDP growth of any state in the Midwest. They went up to 9.85% in 2014, and the number of millionaires has continued to grow in Minnesota as well. We can expect the same. A very good article that I commend to you in Crane's Chicago Business, and it is behind a paywall, so if you have my email and you want it, I can do a copy and paste for you. But the title is, Here's What Really Happens When States Raise Taxes on Millionaires. And it just makes intuitive sense now when you think about it and don't buy into the other side with their, made up actually predictions. Millionaires have place-specific social capital, and they typically have wives who have, listen to me, I wish I could just take that back. They have spouses who have jobs, they have social and business connections, and they've got local market knowledge. This is where they made their millions, and this is where they tend to stay. In fact, in other sort of statistics about moving, poorer, lower income and lower middle income people just move statistically much more frequently than millionaires do. And when you think about it, all these things, it makes a lot of sense. So now there's this opposite land assertion that legislators are going to increase taxes on the middle class as soon as they can do it, that we have a graduated rate tax. In fact, I just heard someone suggest that they might even do it in the lame duck session. For crying out loud, give me a break. When we raise a flat tax, by definition, we're raising taxes on the middle class and, by the way, as Daniel pointed out, lower income people, and really increasing that burden. So if we have a flat tax, every tax raise will by definition raise it on the middle class. There is only one possible way to raise more revenue through income taxes and not raise it on the middle class, and that is by having a graduated rate tax where we can target the raise. Or do I want to say rise? I think I want to say raise. Now here's a nice little chart, nice little pie chart. This pie chart is all of the states that have a graduated rate income tax, which by the way is the vast majority, as Daniel pointed out. So in the last almost 2 decades, almost all of them haven't made any changes at all. In 13% of the other states, which we hope to be joining soon, that have graduated rate income taxes, 13% of them gave a tax cut to the middle class. 5% increased to the middle class. 2% actually, which I think can only be one state, and I didn't look up which one it is, had a tax increase on the wealthy, right? But when we look just sort of broadly statistically, there's actually about twice as much a chance that a state has lowered than that it has raised taxes on the middle class. And I will tell you that our legislators in Springfield have shown no inclination to be raising our income taxes. If they had been more willing to do that back in the 70s, rather than putting IOUs into the pension fund, they could have raised taxes and actually funded to their obligation. We've had these emergency rises in our income tax in the last decade, but guess what? If you didn't know before, you know now, our state has the worst credit rating in the union. And that means, along with everything else, that it costs us more money to borrow money. So our legislators have had to do something. They've done it pretty much on an emergency basis, and they have in fact raised our flat tax. But people say, you know, our property taxes are so high, and then they raise our sales taxes so high, right? Well, yeah, there are these taxes that we don't like, that are so regressive, but they are the only choices left to our legislature as long as we don't amend the Constitution to give them the right to have a graduated rate tax. That is the only tax that can, it's the only tax that's not regressive. And it's only if we have a graduated tax. So lower income earners pay a lower tax rate, higher income earners a higher tax rate. Most states have a fair tax system. The federal government has a fair tax system. There are 4 states, that 3 that join us in having it mandated in our Constitution. So at least the other 4 states with a flat tax could be nimble and decide to have a graduated rate tax simply through legislation, but we can't. We have to have an amendment to our Constitution. So what's it going to mean? Well, I'm going to cut right to, I know Daniel showed you a chart. I like this chart better. I won't spend very much time on it, but the reason that I like it, the red line is 4.95%, which is what we all pay now on all of our income. There are no brackets, but look at this. Over a quarter of our taxpayers in Illinois earn under $10,000 a year, and they are shouldering that enormous tax burden. 60% of us, the vast bulk, make between $10,000 and $100,000 a year, and then another 11% between $100,000 and $250,000 a year. And this is what gives us what we say is the 97% who will pay the same or a little bit less. This is not a big tax break for people. But on the other hand, I've seen some things that are mocking, this is how little somebody might get back. But that small amount of money is going to pay somebody's monthly bill for something, right? And we'll end up with more money to pay for things like the services that many of our income earners in Illinois really need because of the small amount of money that they earn. Also, have a look at this, the millionaire tax, which, by the way, the 7.99% single filers above $750,001, joint filers $1,001,001 a year in taxable income after deductions and credits, right? They'll pay that 7.99% on the totality. That's why it's called a millionaire's tax. That's 0.3% of people in our state. Daniel talked about this, I'll just touch on it. In the Midwest here, 3.6 billion pre-COVID, the assumptions that go into these predictions are out the window right now, but I have been reading probably more like around $3 billion a year over what we raise now with our flat tax. Minnesota's is 9.85 and starts at $164,000. Iowa's top rate is 8.53, ours is 7.9, and that starts at $72,000. So this talk that will be on the train to crazy town if we do this is just that. It's just talk. It's just scaremongering from organizations funded by millionaires and billionaires who simply don't want to pay their fair share. So what do? What do? You tell people, you feel very comfortable that Daniel and I are showing you valid, data-backed statistics from credible sources. If you're on social media, share from the DPOE page, share from the League of Women Voters of Illinois page. I've been even talked about why I'm doing this for the League. Share from the Vote Yes for Fair Tax. And if you belong to another group that might be interested in a talk like this, there are so many people from over 300 different organizations are part of this Vote Yes for Fair Tax coalition. I won't read the ballot measure because you've gotten your little blue booklets and you've seen the wording. So to recap, we don't have a spending problem, we have a revenue problem. Our taxing system in Illinois is so bad that it actually increases income and racial inequality. We want to be fair. This is really probably one of the two main reasons that the League of Women Voters has been against this flat tax since it was first instituted in 1970. A flat tax is poor tax policy, and we are the good policy people. If you've got poor tax policy, it's not good governance, so we're against it for that reason. But we've been against it for its unfair burden. Of course, that's part of what makes it bad tax policy. And back in 1970, which was the first time that we started speaking out against this flat tax, actually a little bit before the Constitutional Convention, we were urging people to not put in a flat tax. The income inequality was nothing like what it is today. Millionaires are not going to leave in statistically meaningful numbers. And some millionaires leaving has been taken into account in the assumptions on the predictions of how much money we're going to make. Right now, we're outliers. And in the 50 years that the League of Women Voters has been against this flat tax and in favor of a fair tax, this is the absolutely first time that it got called to a vote by the legislature. A supermajority voted to put it on the ballot, and it's the first time in half a century that we've had an opportunity to vote for it. So it's extremely consequential, and it is a really necessary step to putting our house in good order. So I thank you for your time.
Thank you, Daniel, and thank you, Kathy. We are now going to give you some of the questions. The first question is something that we had talked about before we went live with this, and we actually had a chat question that ties into this. People have all kinds of questions about retirement income and how that fits in. We actually had a question about the lawsuit. Of course, the Illinois Policy Institute filed a lawsuit on behalf of seniors. Again, this whole idea that somehow this is unfair to seniors, it's going to just strip you of your retirement income. Daniel, Kathy, who wants to take that one?
I'm unmuted, so let me go first. I'll be quick, and then Daniel will jump in with probably more information. All right, so this lawsuit, and also just this whole idea of taxing retirement income, but in particular the lawsuit, it's both disingenuous and also without merit. Let me tell you why it's disingenuous. The Illinois Policy Institute are the same people that want us to have an amendment to open up pensions for our state workers and basically disembowel their pensions, which are contracts that have been agreed on, right? They don't care anything about pensions for people who don't earn a lot of money. They don't care about middle income pension earners, teachers and firefighters, et cetera. Right? It's so disingenuous of them. But it's also really completely without merit. There is nothing in our Constitution. There's just a simple piece of legislation, which is why we don't now tax retirement income. We could tax retirement income tomorrow if the legislators weren't afraid that they'd be voted out of office. Let me tell you that the AARP and scores of other organizations that represent retired people are throwing money into ads in favor of the fair tax because they figure that if we can get more income through a fair graduated income tax, there will be less of a chance that retirees will be taxed. But I will add to that most states that have a flat tax also tax retirement income. So there's no magic. to having a flat tax and therefore not taxing retirement income. It is a bogus argument.
Daniel, maybe you could address this next question, which is something else that I've been hearing a lot, and it also speaks to the ads that have been running against this. I've seen ads saying that the fair tax will negatively affect small businesses and perhaps business in general. Is this true?
No. So there's a few different ways to think about this. I want to start by just, some people wonder, what does the proposal do when it comes to business taxes? Well, first of all, a lot of the small businesses that people have in mind when they talk about small businesses being affected by this are structured as S corporations and are receiving pass-through income, which would just be taxed as personal income anyway, and the corporate tax code is irrelevant one way or the other for those businesses. For businesses that are taxed under the corporate income tax code, what this would do would be actually an extremely modest increase, I think from 7 to 7.9%. So a very, very small change. But I want to back up a second, because this is a really important accusation that is just conflating two different things. Right now, with the economy in a really, really precarious position, obviously consumer spending in many contexts has just plummeted during the course of the coronavirus. We are all, I think, genuinely really worried for small businesses in our communities. And I feel that worry when I walk around downtown Evanston. I think a lot of people probably feel that worry. And so the idea that in this time that we're really hoping that our small businesses can survive, something may come along that makes it harder for them to survive, that sounds pretty scary. But let's just pause for a second. This is an income tax. This is a tax assessed on net income, on profits. The businesses that are making a profit that can be taxed are not the businesses in danger of shutting down. The businesses in danger of shutting down are not making a net profit of over $250,000 or of any amount. And so the question of supporting our small businesses in this difficult moment and this fair tax are totally unrelated, except that the taxes that can really sink a small business, even when it's not making any profit, are the property tax. And the only way to get property taxes under control in this state is to, as Kathy explained very clearly, fix school funding, which we can only do by having enough money come from the state's coffers into our local school districts. And in order for that to happen, this referendum has got to pass. So if we want to actually fix the problem that's hurting small businesses, we have to vote yes.
That feeds right into another question that was asked from Jody. Will the fair tax directly or indirectly affect property taxes?
So it will directly affect them modestly. There will be a very modest property tax rebate that comes as a part of this package, which will be not life-changing, but real money in people's pockets, and certainly nothing that I think most people would want to turn away, given that it's being offered to them. So that's a good little step, but the big step is really comes from the hope of actually fixing our school funding system. Ultimately, our school districts have been raising property taxes. In Evanston, for example, we voted 80% for a District 65 referendum very recently, even though most of us, I proudly voted for that, even though I feel like property taxes are too high, because gosh, our schools need the money and there's no other way for them to get it. To solve that problem, the state's got to actually fund schools properly. To solve that problem, we need a fair tax. It's the only way to make it happen. So if we want a property tax system that is truly under control, that's comparable to our neighbors, step one is pass the referendum. Step two is begin to start funding schools properly. And then step three is watch property taxes come down in a meaningful way.
And I'll add to that exactly correct explanation is that it's going to be a little while because our schools, many of them have deferred maintenance, right? They've let teachers go, they've got to make repairs. And so it will be a little while. But remember that property taxes are really more in our control, right? And so, and no school board wants to be, nobody wants to be taxing property owners more than the amount of money that they feel that they need. So they ought to be coming down exactly as Daniel suggested.
Well, the next question comes from Rachel, which is kind of stacking the deck, but I'll ask it anyway because it's a really good question. It's my understanding that without another COVID stimulus package, which apparently is not looking good in DC, that without another COVID stimulus package with the state aid from Congress, we'll be in another serious financial crisis pretty soon here in Illinois, a la Governor Rauner or worse. What will that look like with the fair tax, and what will that look like without the fair tax? Who wants to jump in? Daniel and Kate, Kathy, you have to unmute and then you can talk.
I'm happy to do it. I'll give you a very, very simple, very, very accurate, and very, very unsatisfying answer, Rachel, which is that it will look $3.5 billion worse without the fair tax than it will look with the fair tax. And I'm not in the legislature anymore. I'm not getting up-to-the-minute briefings on the extent of our projected revenue loss, but quite frankly, the folks who are there they're only guessing also at this point. It's going to be bad. It's going to be bad at the state level. It's going to be bad at the municipal level. That's the only possible consequence of the kind of economic slowdown we've had, which is why, of course, the federal government has to be the place that fills in that gap, which is part of why we have to elect Joe Biden in a Democratic Senate. But one way or the other, the fair tax is going to bring in about $3.5 billion that we even needed before COVID, and that we now need even more urgently thanks to COVID.
Kathy, do you want to jump in?
Yeah, I do. To add to that, beyond just the numbers, if we vote for this, regardless of what happens with the COVID funding package, we will have good tax policy and a fairer, less income inequality and racial economic inequality exacerbating tax policy. So we'll at least start 2021, January 1st, the charts that we showed you will kick into effect. At least we will have good tax policy that is not so burdensome on the people in our state who, as soon as they get $5 extra or 372 extra dollars, are going to buy shoes and have their bald tire replaced in their local community. So regardless of what happens with everything else, we need this.
Okay, I'm going to ask each of you, Daniel and Kathy, to provide one talking point. So somebody wants to know what they're supposed to say to people when the argument is presented to them. Oh, Illinois just wastes money. The system's broken. It's all going to go for pensions. Why should I vote for this? One talking point to rebut that from each of you. Kathy, you want to start?
I knew you were going to do that. I think that I would say that this good tax policy, a graduated rate tax, is what most states have. It's what the federal government has. Every state in the union has a better credit rating than we do. And this will move us into the column with states that have a modern taxing system that allows us to tax more heavily people who have more income. Everything else also needs to be dealt with. Everything else also needs to be dealt with. Ethics reform, pension ramp reamortization, everything else still needs to be dealt with. But this is a very simple, non-crazy thing that will bring us from being outliers to being with modern tax policy. I don't know if that was one thing.
Daniel, you have one talking point to give this lady?
Yeah, look, we can like or not like the situation we're in as a state. I don't like it much. We can think that we got here based on understandable reasons or based on malice. We can think whatever we want, but we're here and the state needs this money. If we pass this, the state's going to get this money by asking the top 3% to pay a little bit more. If we don't pass this, the state's going to have to get that money from somewhere, and that means the rest of us are going to have to pay. Whether that's an increase in everybody's income tax or an increase in the sales tax or an increase in fees, every other way the state can get that money hits working families and the poor disproportionately hard. Why would we want to allow that to happen?
There have been a couple of comments. I'm going to kind of combine them into one question. And Kathy, you had a lot of graphs about this. If we pass the fair tax, if we pass this constitutional amendment, which we hope we will, those inequalities that you show, will they start to turn around? And if so, on what kind of a timetable?
That's a good question, and Daniel might be jumping in on this one as well. Yes, they will start to turn around, but the statistics that I have seen show that next year, once we have a graduated rate tax and the top 3% of income earners are paying more, it actually won't reverse Daniel's chart of the lowest income earners paying substantially higher percentage of their taxable income than the highest income earners. In fact, with the very modest, realistic, absolutely in line with other states in the Midwest tax on wealthier people that we're talking about. And don't let people be talking about the tax increase. It's only a tax increase if you're pulling down $500,000 a year. So in fact, the wealthiest people under this plan will still be paying a smaller percentage of their income than the poorest people in our state. But that is by virtue of the nature of all of the other taxes, which are so regressive. And sales taxes can't be not regressive. Property taxes can't be not regressive. Excise taxes can't be not regressive. But income taxes can. It will go a ways toward redressing that imbalance.
Daniel, did you want to add anything to that? You're muted.
Sorry, I was trying to do a lot of things at once. I think this is the chart that Candace was asking about. What you would see on this chart is that the left 1, 2, 3, 4, 5 bars would all drop a little bit. The lowest bar would drop the most, though not that much, and the next 4 bars would drop kind of a very small amount. The bar that currently says 9.4% would rise, so it was probably something like 10.5 or 11, and then the rightmost bar that says 7.4% would rise almost 3% to be almost 10.5. So it wouldn't, as Kathy said, it wouldn't be. It wouldn't fix everything. And on no dimension, by the way, would this fix everything. It won't fix all of our budget problems. It won't fix all of our inequity problems. It won't fix all of our credit rating problems. But in each of those instances, it would take a real bite out of those problems. And that, to me, seems like the most important thing. We have a chance to vote on something that will give 97% of households a break while taking a serious bite out of almost every problem we have. Is it perfect? No. Does it solve everything? No. But the opponents can't think of an argument against this. They can't think of a single argument against the thing in front of us. They're instead saying, well, we don't like it because it doesn't also do 7 other things, or we don't like it because we worry you might do 7 other things. Maybe that's the most important talking point. Vote on the question before you. And on the question before you, all the arguments are in favor.
In the few seconds we have left, the question before, we had somebody texted in, is it a binding vote or is this just a referendum? Daniel.
Binding. This will when this passes, it will change the Constitution, period. And when the Constitution changes, the tax rates will change effective January 1, 2021.
Okay, Rachel, did you want to say a few words in conclusion tonight? You're muted, by the way. You're still muted. Can you click on your little red on the upper right corner? There you go.
Okay, now I have the power. Hi, everyone. I'm Rachel Ruttenberg. I am the board president for the Democratic Party of Evanston. I want to thank Joan. I want to thank Kathy. I want to thank Daniel for joining us tonight. This was an incredibly informative session. And I want to thank all of you for deciding to spend your Tuesday evening learning about tax policy with us. This is, as you can tell, a super important topic. And I did want to just say, like, in a world that feels really crazy right now, in an election cycle where we in Evanston feel like we can't really impact much of what is going on around us, we can do two things. We can phone bank with DPOE on every Saturday morning at 10 a.m. for Joe Biden, and we can vote yes on fair tax and tell everyone we know everything that was just shared with us tonight about how important this is to the fiscal structure of our state and for us to be successful moving forward in the state of Illinois. So I want to just promo the two events we have coming up, or I'm sorry, we have one event coming up, the Climate Crisis, the Solutions Are in Reach on October 10th. We wanted to mention that. We also just released our sample ballot and would welcome you to also share that with your contacts. It is available, it will be emailed, and it is available on our social media. A recording of this event will also be available. And thank you so much again to our presenters. And I hope everyone has a good evening and vote yes at the top of your ballot for a fair tax.
Thank you, guys. Thank you all for being here. Good night.
Thanks, everybody.